Let me ask you something. What if insurance wasn't a contract you sign with some giant faceless company, but a pact you make with a community? It sounds kind of out there, right? Well, in China, a brand new model with, get this, over 100 million members is doing just that. So in this explainer, we're going to break down a system that might just flip how we think about risk, trust, and, just helping each other out. Okay, so here's our game plan. We'll start with the most mind-bending idea at its core, then get into how this whole pay-after-you-go thing actually works. We'll look at a real-world example, dig into the challenges, because there are definitely challenges, and then zoom out to see what this could all mean for the future of insurance everywhere. All right, let's jump right in. What is the most radical part of this system? We're going to start with the one feature that completely turns traditional insurance on its head. I want you to really think about this for a second. Imagine you submit a claim for a serious medical problem, but instead of some insurance adjuster in a cubicle deciding your fate, your case, your story, is put to a public vote. Does that sound absolutely crazy to you? Well, it's not a hypothetical. This is happening right now for millions of people on China's massive net mutual aid platforms. And it's this exact idea that makes the whole system so incredibly different and honestly so fascinating. So, how in the world does this actually work? Beyond the whole public vote thing, the entire financial setup is completely different from any insurance you or I are used to. They call it net mutual aid, but a much easier way to think about it is just split the bill insurance. Seriously, there are no fixed monthly premiums. Instead, when a member gets a claim approved, the total cost is just divided up among everybody else in the group. You literally split the bill after the fact. This table right here, this really gets to the heart of it. With your typical insurance, the company makes more money when it denies claims, right? It creates this you versus them dynamic. But in this model, the platform only takes its fee when a claim actually gets paid out. So their incentive is to approve legitimate claims. It totally shifts the dynamic from a battle against a company to a community of members helping each other. Now to make this all a bit more real, let's look at the biggest player in this whole space, Xiang. It translates to mutual protection, and it's run by Ant Group, an affiliate of Alibaba. It is the perfect case study for seeing this thing in action. And the scale we're talking about here is just staggering. Xiang and its main rival each have over 100 million members. To put that into perspective, that's more people than the entire population of Germany. This is not some tiny niche experiment. This is massive. And getting started is ridiculously simple. You just open the Alipay app on your phone, answer a couple of health questions, have a decent credit score, and boom, you're in. There's a 90-day waiting period to stop people from signing up when they're already sick, but that's it. No doctor's visits, no stacks of paperwork. And this is the main attraction for most people, the cost. Because you're only paying a tiny, tiny fraction of actual claims, the typical contribution works out to be around 8 yuan. That's just over $1. It's an incredibly low barrier to get some peace of mind for critical illnesses. But here's the thing. While that super low cost gets people in the door, the real innovation here, the secret sauce, it's not just about the money. It's about the entire experience and this feeling of being part of an actual community. So let's go back to that public voting system and look at a real case. A 41-year-old member tragically died of a heart attack, and his family filed for the payout. Seemed pretty straightforward. But there was a catch. So here's the problem. In the panic of the emergency, he was rushed to the closest hospital, which just happened to not be on the platform's pre-approved list. Now, that rule is in place to prevent fraud, but in this case, it was just impossible to follow. So the platform did something amazing. They put the question to the community: stick to the rules or pay the claim. More than 100,000 members actually voted, and the verdict was overwhelming. 63% said pay the claim. They chose to prioritize the human element over a technicality. And since it cleared the 50% mark, the family got the money. The community made the call. See, this whole process builds a totally different kind of trust. It's radically transparent, the incentives, as we said, are aligned, and members feel like they're actively helping a real person, not just sending money into a black box. But you also have to be responsible, right? Because every claim that gets approved means your own future costs will go up, just a tiny bit. It forces you to balance empathy with that shared financial reality. Okay, but as revolutionary as this whole model is, it is far from perfect. And lately, the system is starting to show some pretty serious signs of strain. So, first off, after years of just explosive hockey stick growth, the number of members is starting to flatten out. That initial gold rush of signups is over, and the platforms are finding it a lot harder to bring in new, young, and healthy members. And at the exact same time, costs are going up. As the whole member base gets a little older and more claims naturally start getting filed, the average contribution has jumped pretty dramatically. It's still cheap, for sure, but that trend line is pointing in a scary direction. And this creates a classic problem in the insurance world. It's called adverse selection. Basically, as the costs start to rise, who's the first to leave? The healthiest people, right? The ones who think, I'm probably not going to need this. Well, that makes the remaining group, on average, riskier, which pushes costs up even faster for everyone who's left. It can become what they call a death spiral for the system. So what's the big takeaway here? I mean, whether this specific model in China survives in its current form or not, it's actually part of a much, much bigger global shift in what insurance is and what it could be. We're seeing this fundamental move away from passive insurance to active insurance. You've probably heard of telematics in cars that give you a discount for safe driving, or health insurance that rewards you for going to the gym. This mutual aid model fits right into that trend. It's an active system that's trying to build community and transparency. It's trying to change behavior for the better. And that really leaves us with one final big question to chew on. For centuries, insurance has just been a passive safety net, right? Something we fall back on when things go horribly wrong. But are we now seeing it evolve into something more? An active tool that's designed not just to protect us from risk, but to actually help shape a healthier, more transparent, and more connected society? That's the huge idea at the heart of China's billion-member experiment.